HSAs are the single most tax advantaged account, and here's why. Contributions to an HSA are tax deductible, so your income is not taxed when you contribute to an HSA. Also, the growth is not taxed. Also, when you pull it out, it's not taxed. Like, y'all, that is unheard of. However, the qualifications are that you have a high deductible healthcare plan, which ADHP is probably what you see on your healthcare enrollment forms. And this basically means that when you go to the doctor, your deductible is higher, so like the limit that you have to pay before your insurance kicks in. And when you have that type of plan, you can have an HSA because in theory, you could pull from the HSA to pay down the deductible. And an HSA can be used for any qualified medical expense. And the really cool thing about it is there's no time limit for when you reimburse yourself for these funds. So, okay, I just said I'm getting LASIK. I'm gonna get my LASIK, and I don't necessarily have to pull that money out of the HSA right now. If I don't think I need that money immediately, I can let it sit in the HSA and grow. But then, like, say 5 years down the line, I'm like, oh shoot, like, I don't have enough money personally, like I need to pull it from somewhere. I have money in my HSA. Okay, cool. Like 5 years ago I did LASIK, pull the money, here's my documentation. Like there is no time limit. So I have a lot of clients who will literally use an HSA as a retirement account and just let it keep accumulating.
She's right on the money. This is something where you're looking at an HSA as an investment vehicle, and it's a triple threat. It's a triple threat tax advantage plan. You're talking about pre-tax money coming in out of your paycheck. Now, that's already, let's say you have a 20% tax rate, just to make the numbers easy. And you could either take $1 out of your paycheck, it gets taxed. Now, let's say that's 80 cents that you're gonna go and pay towards a prescription. Or you could take $1 before taxes, it goes into an HSA, and then right away you could go and buy a prescription. But you have a full dollar instead of 80 cents to go towards that prescription. That's already, it's like getting a 20% discount on all your medical expenses. And then if you leave it in there and you invest it, let it grow, that growth is tax-free. Unlike if you just took let's say you take that dollar and it gets taxed, you take that 80 cents, you put it in Robinhood, you throw it at some meme stocks, they go up, they go down, who knows, but you're gonna get taxed when you sell that stock. And so you're gonna pay your capital gains tax. And so that's another example of it being, now it's being taxed twice. But if you put in your HSA, you take that full dollar, it doesn't get taxed, it goes into the HSA, you invest it, and hopefully an index fund or maybe some value or growth mutual funds. And so you're taking that dollar, you're putting in there, it grows tax-free, and then when you are pulling it out, you're not paying capital gains tax when you go and pay for that prescription a year, 5, 10, 50 years down the road. It's grown tax-free, and as you pull it out, you're not having to pay taxes on the capital gains tax in the interim as well. So there's all these different ways that you could be taking your HSA money and growing it in order to work more for you, because on down the road in life, 10, 15, 20, 30, 40, 50 years, you're gonna have more medical expenses down the road, and you're gonna want to be able to have an account that is growing tax-free to be able to take care of your costs later in life. It's planning ahead, it's thinking for the future. That's just smart money.
Here's how to use your HSA like a rich person. Hi, I'd like a reimbursement from my HSA for my last 15 years of medical expenses. I'm sorry, but I can't just give you money for things that happened years ago. Sorry, I forgot. Here are my receipts. So why didn't you get reimbursed when you incurred these costs? Well, I've been using my HSA as a retirement account, so I invest my tax-free contributions, and now the money that I didn't take out of my HSA years ago has grown tax-free. Well, I'm sorry, but these expenses are way too old. Actually, the IRS says that as long as my HSA was open at the time of the expense and it wasn't covered by another source, I can wait years before requesting reimbursement. Fine, here's your money.
Here's a great example of someone who is accumulating expenses, keeping the paperwork together, holding onto the receipts, and then reimbursing themselves later on in life after they paid out of pocket for these expenses. Now, this is a great idea. And if you're someone who has, maybe you have a lot of income and you're maxing out your HSA, but you're also able to cash flow all your medical expenses, then this could be a great solution for you. It could be stressful if you take all of your HSA, you invest it, And then all of a sudden you have a big medical expense comes up, you can't cash flow it yourself, and all of a sudden you're having to liquidate these invested HSA funds. Maybe the stock market went down like it has recently. Maybe it's going up and you don't want to cash out right then. And so regardless of the tax implications, because it's a non-taxed account on the growth, you're taking all this money, you're putting in your HSA. It just can be a stressful situation if you're not reimbursing yourself through the HSA, and it's not taxed as it comes out. So it's hard to really justify not taking that reimbursement and then investing it and letting it grow in something else like maybe a Roth IRA that you're also contributing to. But this is a great example of someone who is using maybe some extreme time frames, 15 years of expenses, to highlight the fact that you can accumulate these expenses and continue to reimburse yourself. It's not year to year. These funds don't go away. There's no rollover limits. It's not if you don't use it, then you lose it kind of mentality. This is your money and it's able to grow in your account and continue to work for you even later on in life, 10, 20, 30 years down the road.
Let me explain it this way. You get a tax deduction on the way in, no matter how much money you make. It grows tax-free. You invest it in anything you want, and it comes out tax-free at any age for medical. So freaking easy. So awesome. I own a rental property in my HSA in Chicago, little meth lab. It's adorable. And I also own some cows. I own 10 cows on a little farm in my HSA. All the profit from my cows and my rental go into my HSA and can pay for my medical, my spouse, and dependent children. Boom.
Boom. This is a great example of someone who is maybe looking at some alternative assets to invest HSA funds into. Now, this is dependent on who your HSA provider is. A lot of them are going to use limitations on how you're able to use your HSA funds. And so most providers that I've looked at, if it's a provider that's worth its value, it's going to have low to no fees, and you're going to be able to invest in index funds and a variety of mutual funds just like you would a quality broker. So for 99.9% of people out there, I would always be recommending taking your HSA, investing it into some secure, diversified, traditional, different options like an index fund, and letting your HSA grow so that you know on down in life, 20, 30, 40, 50 years, you're able to use it. What's really important that he highlighted is that you can contribute to your HSA regardless of what your income level is. There's no limitation. So if you're a high net worth individual and you're making a lot of money, you can still contribute the limit. And so look up what that limit is for this year and realize that this is something that you could be using. Even if it's a drop in the bucket for you, it's something that can benefit you and your loved ones with your medical expenses, and you're going to get, it's all about not just one edge, but a whole toolbox of resources. All these different edges are going to really put you that much farther in your rate, in your momentum towards your money goals. Thank you so much for watching. If you're an all-star, you made it all the way to the end and you haven't hit that subscribe button, go ahead and punch that button now. Hit the like button, give it a thumbs up, and most importantly, if you found value in this, share this video with someone that you know that maybe they just got into their first job and they're looking at all their options. It's open enrollment time and they don't know which healthcare plan to pick. So go ahead and take this video, forward it along to your friends, and give me some feedback. Put a comment below in ways that you found this interesting or some things that I missed. What are your questions about different items in your entire toolkit in your money journey? And we're going to find ways to help you increase your momentum to your money goals.